Good afternoon and welcome to GrainTV. It's February 7th, 2013. I'm Logan Burgess. To my right here is Brock Shimano. Well, Brock, let's jump into fire tip here. See how the grains traded one day before tomorrow's big USDA WASDE report. As we can see, we had corn, the big loser today, backing off 12 cents there on the March contract. Soybeans actually held in pretty well today, but if we look out to the more deferred months out in November, we saw those contracts closing in the red as well. And Chicago and Kansas City wheat both slid lower. We had Chicago wheat off 6.5 cents, Kansas City wheat down 9.25. If you guys want live quotes over at your home or office for tomorrow's big report, visit us over at grainhedge.com. You can take a no-obligation demo there of our trading platform. But you know, Brock, in today's action, we did have some technical levels tested, but kind of the big news of this morning was the export sales report. Can you break down for us what we saw there?
We did get the USDA's weekly export sale report this morning. Basically what we saw was corn coming in within analyst expectations at 160,000 metric tons combined total for this year and next year. Wheat hit the lower end of expectations at 300,000 metric tons, and soybeans exceeded expectations once again at 1.67 million metric tons, a combined total for this year and next. Yeah. And where does that leave us as we head into tomorrow's report for the current marketing year? If you take a look at this chart we've been following all year long, the red line is what we should be seeing to meet current USDA projections on soybeans, and the blue line is what we actually are seeing for export sales. You can see once again we did exceed expectations. We're now 147 million bushels ahead of pace to meet the current USDA projections, and we moved up another 11 million bushels this week alone. If we take a look at corn, though, it's a little bit different story. We've been pretty slow on the corn export sales this year. This week we did meet analyst expectations, but we fell short of what we need to see to meet the current USDA projections. We're about 55 million bushels behind pace, and we fell another 8 million bushels alone this week.
Okay, with this data in mind here, Brock, I know tomorrow people are going to be looking at export sales of both corn and soybeans very closely. In your mind, are we due for another revision here on the corn side of things, or do you think the USDA is going to kind of stay the course?
You know, I don't think we're going to see a revision for either corn or soybeans at this point. Corn, we did, if you remember last month, we did get a large reduction in the anticipated export sales by about 200 million bushels. So I don't think they'll follow that up in this month with another revision. For soybeans, you know, I think the idea there is that once South America really ramps up their harvest and starts exporting at a pretty rapid clip, that we're going to start seeing some of our export sales of soybeans really dwindle or taper off here going throughout the rest of the marketing year.
Okay, we'll have to wait for tomorrow to get those numbers, but just in general here to remind you guys what the trade's expecting out of tomorrow's report. As you can see here, the second column is the January USDA report, and here the third column is what the trade is expecting out of tomorrow's February USDA report. As you can see here, expectations are for corn ending stocks to be increased by 16 million bushels. Soybeans ending stocks there are expected to decline by 6 million bushels, and we're expecting a slight revision higher for wheat in terms of ending stocks there as well. You know, if we take a little bit of a closer look here at corn, you know, Brock, last month, as you said, we did see a big revision there to export sales, down 200 million bushels. We saw the feed number get revised last month as well, up 300 million bushels there as well. But one number that the USDA really has not touched since August is the expected corn going to ethanol production. And if we kind of remind you guys what we've been following here throughout the marketing year, as you can see here, the red lines are the weekly ethanol production figures. The green line is the grain hedge forecast, and the blue line is last year's numbers. And you know, nobody's really expecting production to be where it was last year, but I think that if we look at the changes that have gone on within the ethanol sector since August, we've seen about 40 cents taken off the crush margin per bushel, and we've seen a number of key plants shut down. So I think there certainly is a potential for tomorrow to see a revision lower there in expected corn going to ethanol. Certainly our models right now indicate that eventually the USDA will have to remake a revision there at some point. Will it come tomorrow is anybody's guess, but that is one area to keep an eye on tomorrow. You know, tomorrow the report will be coming out at 11 p.m. Central Time, or excuse me, 11 a.m. tomorrow Central Time, and we'll be tweeting about that when it comes out. At GrainTV is where you can find us over there on Twitter. Just a reminder, you can always visit us over at grainhedge.com to take a no-obligation demo of our trading platform and get those live quotes for tomorrow. But I think that kind of wraps up the action that we saw today. Thanks a lot for joining us, guys. We'll see you tomorrow for the big report.